Good morning. It is Monday, July 28th, and your Texas Rangers are on a tear. We are officially tied for the wild card spot. Still early, but really exciting second half of the season here, getting going, and we are coming for you, Houston, only 4 games out. So to the markets here, I want to give you just a quick update. It's a big week for the markets. The Fed is meeting again this week. So here's some of the highlights that we're going to be looking at this week. But the Fed is meeting this week, and experts are predicting no changes to the federal funds rate. So the real focus is going to be on what they say in those press conferences and in their speeches about future cuts. So are we still on track for a potential September move? We will be watching very closely. So on the global front, we've got a deadline of August 1st for tariffs. So very much approaching. That can impact markets depending on how negotiations shake out, and especially with inflation still in the spotlight. So as we open the week, the markets for the mortgages are relatively unchanged. Gives us some breathing room for now. So this is the Treasury. We've talked about this. If you want to see interest rates on your mortgages opportunities start to come down, then we need to see this number moving down closer to 4.0 or starting with a 3. So whenever it's in green, that means that mortgage rates are actually going to be higher. So green is not always good because these things work inversely. Now, the mortgage rates to kind of start off, these are your national averages. Right? It's the site that's just really easy to use. They track data pretty well. This is not always perfect to what you would get quoted to you from an actual mortgage broker or loan officer, but this gives you a really good idea of what to expect and how to budget. So you can see here, the 30-year mortgage rates, this is year over year, just still higher than this time last year, but we are starting to come down here. A little bit of tail end, not so great last week. That's probably pushing into the Fed rate cut remaining the same. They're already pricing it in before those things happen. So this is conventional. This is FHA, same thing, right? Follows roughly the same, but we're looking at about 6 and just under 6.5 average for FHA, 6 and just say about the same for VA, and then always a little bit higher on conventional. So same chart for the VA. To talk a little bit about a product highlight, something that, if you're a buyer looking or if you're a realtor and have clients, a lot of things that are hot right now in the news are VA and FHA ARM loans. A lot of people are kind of scared about that word ARM because of the old days. We can help you understand exactly what it means if you're interested. But these, so absolutely, these adjustable rate options are not for everyone, but they are helping buyers right now with their initial monthly payments. They're bringing down monthly payments and entry-level costs. So it's helping more people qualify as well and qualify easier. So it's helping with debt-to-income ratios and just getting them into homes that they might not otherwise afford if they took a regular standard loan strategy. So if you are someone that's under contract or a realtor that has a client that's under contract or about to be, now is the perfect time to get a second opinion or a quote. So whether you're an agent or a buyer, let's make sure you're not leaving money on the table. Call or message me directly to run some numbers. We're here to help. And don't forget to follow me on all socials and then on YouTube as well for all the different content and real estate market related information that we're putting out. So have a great week. This is your Clubhouse Insider for Monday, July 28th.